it's been a long time since I've heard anyone poo-pooing Amazon, and I find it fascinating and it intrigues me. So can we go through the reasons for your skepticism again? Number one was the way they amortize the AWS
Well,
business.
number one, I think, is the capital intensity of the web services business and the intensity of the web services business, and the fact that if you look at where the real land grab is amongst the FANG stocks, it is in that web hosting and the web services business. So I think there's going to be what you guys would call a kind of crapshoot in that game.
Okay.
Secondly, it's an incredibly capital intensive business, so I don't think you're going to have expanding margins. Secondly, Jeff Bezos has stepped off, and there's a new sheriff in town, and I think that for big, incredible founder-driven companies like Amazon, when that happens, it's a little bit like when corporations name sports stadiums. I think
okay.
I think hubris steps in, and I think the most fundamentally important thing about Amazon is that, as I say, they had this incredible advantage in terms of pricing and such like, and now that the sales tax elements are beginning to feed in, they don't have the same degree of advantage they had before. So I think you're paying a very heavy multiple for a company that really has, I don't think, much prospect for margin expansion, and is becoming an increasingly capital intensive business. But as a customer, as a Prime customer, it's an utterly brilliant experience. And so, when the moment you try and kind of, the moment you try and be negative on it, you get a lot of pushback.
Okay, and then you contrast that to Google, which you think has
well, paid search is the single. I think paid search is the single best, arguably the single best business model ever. I mean, I think YouTube is a phenomenal business. Lots of people fear Google being broken up. I think if Google was broken up, the incremental value that would be created from a Google breakup would be much greater than the current share price. So to me, I think Google is in this. I think Google's search business, there's so much technology embedded in that now that I would argue that there's probably a national security element to Google being able to turn around to the US government and saying, "Listen, guys, you know what? We know we've got the information. Kind of leave us alone."
That's funny. So now, would you actually recommend that as a pairs trade, or is this just something that you would highlight as, oh, well, listen, if you're going to own tech, this is the tech to own?
Well, I think it's did you ever see a film called Minority Report? There was a film called Minority Report that with Tom Cruise.
It's Tom Cruise. Oh yeah.
And he was a kind of futuristic detective. And he used to have all these screens, and he used to be able to move his hands around all these screens, and he could bring all the stuff in. And I always wanted to have that technology to look at markets. And one of the things what it's done to me is to make me realize that I need to pick my battles. Okay. And so picking a battle on trying to short a stock that is one of a club of 7 of 25% of the market value, I just think it's a battle I don't need to take. That's not a battle I want to have. So I think I'd rather have the battle of kind of, of not owning Amazon, but owning a bunch of other, but owning, Spotify, Twitter, Snapchat, etc.
Okay.
On the opposite side of it, I think that's the way I would look at it, versus having one FANG against another.
Right. And when you're thinking about that portion of your portfolio, do you worry about any shifts that we might see? Because there has been a huge run into tech because of the whole COVID, and we've had lower interest rates, and it's been just you want to own the longest duration asset, and arguably tech is the longest duration asset out there. And so do you look at this and say, I could see a situation where, although I love the Google business, we're going to have higher rates, and this business, all of these tech stocks are going to be under pressure in the coming years?
I see no. I mean, I've as running an active, running an active fund. I've constantly found myself being beaten to death for the last few months by the S&P and those stocks in the market. When you actually go through the earnings reports on a lot of these big tech stocks, there's no doubt about it. There is going to be some comparisons and some weaknesses going to set in. And so to answer your question, I think someone like a Google, could Google miss on an advertising revenue number, for example, sometime in the next few quarters? I think it's eminently possible. So I just think at the moment, positioning is incredibly lazy. I think there's way too much lazy money sitting in these big tech stocks. And it is incredibly logical that the Fed needs to start thinking about preparing the market for taking the drip out of the patient's arm and seeing if the patient can walk down the corridor on his own. And I think in that environment, if we get a 10-year that pushes back up towards 2%, which it should do in terms of where we are, that's positive for the market. But I think it's absolutely not positive for the multiples we're going to pay for some of these big growth stocks.